We detected 22,500 unusual options activity on Microsoft MSFT on Friday, August 18. And in this video, we will explain what this could mean for Microsoft stock and why we are not necessarily going to follow this large trade. Because if you take a look at this value, 22,500 multiply by the cost of the trade, 44.80 is 4,480 per contract. This trade was about $100 million. Okay. For the September 15th, 300 strikes, you can see that over here, right here. They're closing this trade. You can see the open interest of 36,000, which is greater than the 22,500. So these opening trades are being closed, and what they're doing is they're rolling it to the November 17th, 89 days away. And you can see here, open interest of 391, much less than the volume. So these are the opening trades, the 280. So they've rolled it and are opening this position now, which is why this is the value of the current trade, where you have to make that calculation based off the pricing that they got it at. Okay, you don't have to calculate this one because these are closed now. However, these 300 strike calls for the September 15th are also very important, because this is also why we are not necessarily going to follow this bullish trade, because by rolling it out to the 280 strike calls, they're essentially in a long bullish position here. This would be their position with a 81 delta per contract, which is going bullish long. But the reason why we're not going to follow it is because you can see that on May 23rd of this year, this is when this large investor put on the trade. The 300 strikes for September 15th, on that day, 25,000 of these contracts came in. Okay, this trader put on this trade. May 23rd is all the way over here. This is May 23rd here. And what was the price? We were trading at about the same price as on August 18. You can see that here. The price was $315 on that day. That's when they went bullish on Microsoft. And you can see that the value of those call options were about $30, which is $3,000, right? And now, today, August 18, or August 20, but on August 18 is when they made this trade. You can see that the value is $2,000 now. So they lost $1,000 in value, which is about a third of the value of these options at the 300 strike calls. Okay, and because of this reason, we don't have as much confidence. Our analysis doesn't give us a high confidence rating on this particular large investor, okay, that put this trade in. So it's very important to look back and understand the large trades, these unusual options that you detect. Just because they're very large does not necessarily mean you should always follow every single one. You have to look at the data, you have to track a lot of data and analyze past data as well. And that's what we do. And that's why we have a higher accuracy of predicting price movements based on unusual options activity. Because even though there could be unusual options scanners out there telling everyone where these unusual options are, they are not necessarily tracking to understand the full picture, the historical data, and finding out where that flow is actually coming from, and whether or not this particular large investor is a loser or not. Because we don't want to follow losers, right? We want to beat the market. We want to follow the winners, the large investors who have the edge. Okay? And so if you're interested in those types of unusual options, I encourage you to join our membership, where we provide unusual options activity on other stocks that have better data, where we believe these investors have better predictions based on their unusual options activity that we detect and we share with our members in exclusive videos, which helps you diversify your portfolio, reduce risk, and maximize your profits. If you're interested, hit the join button on our channel homepage to learn more on how you can join and start maximizing and improving your profits to beat the market.